Hello traders, and welcome to another weekly Forex Market Forecast. Hopefully everybody has been having a great weekend, and happy Easter to those who celebrate Easter this weekend. And here we go with another weekly Forex Market Forecast. We are entering into a new month of April. For our members, we have already provided and explained what we can expect overall within the month and how it's going to be a great month overall for us. So, of course, if you are interested to see what we have been sharing to members, feel free to join with the link in the description. Other than that, let's start with the dollar index as we usually do. For the week ahead, we can expect the market to keep pushing up in the beginning of the week, whether with a small pullback and then push up, or from the here itself. And then the market should react to the downside for at least this move right here. There is NFP on Friday. Of course, this has nothing to do because, as you know by now, the market is moving itself. You don't really need certain news to move the market, for those who understand trading, of course. And overall, the bias for the dollar index should be to the downside after another push to the upside. We should see a reaction to the downside first before anything else takes place. These, by the way, these are our trade recommendation results on the trades that we have closed since the beginning of the first one we have shared on the 23rd of February, which we started the channel and the service from the 17th, 18th of February. So overall, what this is telling you, for those who don't understand, this is how professionals track their performance. This is based on a 1-to-1 ratio, which means 1% or 1 unit of risk. So these percentages, they measure the magnitude of the move the market has moved. So even if you go on TradingView and you open long or short position forecasting, you can see the percentage of the move of the market. This is how we track this performance, okay? And we do have about 4 open trades that we are holding within the members, and we will be sharing another 2 to 3 within the coming week or so. So if you want to figure out what we are trading and what we are expecting, again, you can join us. Feel free to do that with the link in the description. The dollar yen, we can expect the market to give us another push to the upside from the beginning of the week before it rejects and reacts to the downside for at least a correction. What we can expect Monday, Tuesday into Wednesday is to see this push to the upside first, and then the market should give us with a correction to the downside. So overall, we will not be looking to trade this pair for our members because we don't have anything clear right here, and the market can remain sideways to higher and then give us a correction to the downside without a clear setup or a structure. But overall, this market, you should not be looking, if you are watching this video, we do not recommend chasing it to the upside for the time being. For the euro dollar, similarly, we have been expecting this bounce last week with another push to the downside. The market reacted 100% as we have been expecting from the previous weekly forecast, of course. So now the market entering the week should give us some sort of consolidation, maybe a little bit more downside overall, but it's going to be very choppy price action in the beginning of the week, and then later on we should start seeing a push to the upside for the euro dollar. So we are not interested in selling. We are only looking for possible buy setups in this pair with minimum possibilities to reach the 109, 108, 109 area before anything else takes place. I would like to go briefly on how you can actually become a member to our paid service and what you can expect. With the link in the description through BMC, as you can see, you will go to the membership section and you will come across those 2 plans. As you can see, I have very clearly, we have clearly provided the differences between the 2 and what extra features you get with the premium. We do recommend the premium most of all, because with this plan you are going to receive much more value, and you are also going to be receiving some in certain degree, it's like a mentorship program as well, because we conduct daily live sessions between Monday to Thursday, as you can see, from 5 p.m. GMT. Usually it lasts 1 hour and a half on average. The session is recorded, so you will have access to the recording to watch whenever you want. You are also going to be receiving order flow updates. We are not talking about retail trading order flow, which you find anywhere. This is actually real market data that we have access to. And plus, you're going to be receiving also some additional support for the trade recommendations and how we manage them over time. In contrast with the standard plan, which you just receive the trade recommendations, you receive the weekend's market overview video and report. This is with the standard, and with the premium you get those added features here that should be ideally what a serious and high quality trader should be looking at. Both plans are available on the yearly, which you can save 2 months within the year. So this is how you can join. As you can see, we have exclusive posts, which means if you join any of the plans, you will unlock all previous posts. So we are not hiding anything, everything is recorded. Of course, if you join the standard, you will not have access to the live sessions and the premium content that we upload for the premium members. So those in a nutshell are the differences between the two. If you have any questions, feel free to send us an email at support@roiforecast.com and we'll get back to you within the day. Okay, and hopefully I will see you guys there and help you to become a high quality trader. Pound dollar, very similarly, we have been expecting this bounce in the beginning of the week last week, and then we have been expecting the market to react lower still. We can see possible consolidation for a small push up within the beginning of the week. It can break these lows or it might hold. Either of the case, it doesn't really matter. After this consolidation to the downside, we can expect the pound dollar to react to the upside again. So we are not looking to sell this one. We are only interested in buying pound dollar for the next week ahead onwards. For the pound yen, we have been expecting the market to remain sideways, as we have been saying from the last week. We said we are not looking for any trade setups in this pair. As you can see, the price action is very choppy. And what we can see for the next week ahead, possibly this to continue, or alternatively, we can get another push up like this before a correction. So either way, this pair is not good for trading at this stage. So we will recommend that we skip this one. We are not going to be looking for anything specific. However, the overall bias can remain sideways to higher in the near future onwards. However, the market is not clear right now, so we do recommend avoiding trading this pair. For the EURUSD, what we can expect for the coming week is a push up and then a turn lower. We have been saying for the last few weeks that the market was in a bounce corrective structure and then it should be turning lower, which seems to be the case. So we can expect a small bounce and another turn lower from the coming week onwards in the pair. So we are not interested in any buy setups at all for this specific pair. From the metals, gold, we have been saying from the last week that the market is expected to push up after this pullback, which has been the case exactly as we have been expecting again. For this week, we can expect a very small pullback. It can be even smaller than this. Regardless of the case, we can see the market remaining supported, so we can have a sideways to higher gold within the week and thereafter. So we are not looking for any sell setups at all. Buy setups at this stage, they are becoming worthless, so the risk to reward is not worth it and there is no proper setup or good ROI to be trading this one. Regardless of the case, we can expect the market to keep pulling back and pushing up in this type of fashion for the upcoming week and thereafter for now. For oil, we have expected the market to correct and push up. We have said that from the last week. Overall, the price action is still within the corrective channel right here. So that's why for our traders, we do not recommend trading oil at this stage of the time. And what we can expect for the coming week, it's some sort of consolidation, maybe another push up. So overall, the market should remain to this channel right here, and then later on which we should be able to see a rejection down the line. Alternatively, if the market provides us with a bigger push up like this, it's still not going to change much, because later on we are expecting the commodity to find some pressure and give us a reaction to the downside. So that's why we do not like to trade oil at this stage, and this is what we can see for the next week onwards. For natural gas, we have been saying that the overall bias remains to the upside from the beginning of the March, where we found sellers from this extension area. So the market has opened with a gap up on the 25th of March, 26 right here, with a new contract. So what we can expect, possibly it was the alternative that we have been mentioning as well, which is a double correction bounce, something like this, before the market reacts to the downside again. So overall, as far as we are below $2 right here from this extension area, gas remains with risks to the downside. So for our traders, we do not recommend trading this commodity at this stage of the cycle. And it will be interesting to see what happens in the next week if we get this bounce and then the turn lower again. For the indices, the SPX S&P 500 cash index, what we can expect, we have been saying from the last week, the market should remain supported. As you have seen, we got a small pullback and then another push up, which was expected. So we can still expect some more upside, even if it's slow within the week. Then we can possibly get a pullback. So overall, we do not expect anything significant yet in the indices. Overall, they remain sideways to higher within the coming, let's say, week or so. So overall, for us, for our traders, we do not like trading those, and we want to let the market first provide us with any solid or clear setups before making a trade. So other than that, we do not see any value at all trading indices for the coming week, or perhaps the month of April for the time being. So this is what we can see for the next week ahead. To conclude the session, of course, we will finish off with our two ETFs, QQQ and GDX. So for QQQ, we have been expecting this consolidation for the previous week, as we have been saying. We can expect for this week to get another push up perhaps, and then we can get another pullback. So overall, this is what we have trying to explain also from the indices and the three Qs, which is related to the NASDAQ futures price action overall. So we can expect to remain supported and then get some sort of a pullback, but we are not really expecting any drastic moves in these markets for the next week onwards. So we will not be looking to trade at all until we get clear setups over here. And for the GDX, it has pushed up as we have been expecting. So we can see a little bit more upside, then a pullback, and then another push up. So overall, GDX remains supported, which also provides support to the other metals such as gold and silver. So overall, this is the dynamic and overall view we can see in this one as well. So with that note, guys, we have finished off with another weekly Forex market forecast. Hopefully, everybody has been getting value from these weekly forecasts. Once again, we do not provide any detailed analysis, and we do not provide any sort of added support over here, because we do have a service, as you can understand. So our members are receiving much more value and information that you really need to have as well if you are a serious trader. So consider joining us with the link in the description, as well as if you are looking for a reputable and a good broker to be trading with regarding Forex, commodities, indices, or ETFs, consider joining One Royal. We have a link in the description for cashback, which means if you join with that link, you will be eligible to save up to 15-20% of your trading costs on a monthly basis. We are not affiliated, so we are not receiving any funds if you join. So we are just doing that to help our traders to save up on trading costs and provide them with one of the best trading conditions and stability in terms of liquidity, and so on and so forth, for those, of course, that do understand what we mean. So with that note, guys, enjoy the rest of your weekends, and we'll see you in the next video, which probably is going to be on Wednesday with another educational video. We might try to do a little bit of a different format. We'll try to do some more practical examples with numbers for the struggling traders out there. And other than that, we can see you also for the next weekly market forecast next Sunday. So enjoy the rest of your weekends once again, and we'll see you in the next video.